Good morning. My name is Scott Redler, Chief Strategic Officer at T2Live.com.
And I'm Brittany Umar, and together we bring you Morning Call. So mixed markets around the world. Europe is off a bit. Asia has a positive tone, however. The Nikkei reversed after 1 month lows, and the Shanghai was up more than 1% after its holiday. So, Scott, what would you say about the strength of world markets before we dive into ours?
Well, you want to look around the world and try and examine the backdrop. Like, do the headlines in the U.S. is it creating damage around the world? And I would say before this whole circus started, even before Syria, you saw some positive trends in Japan. We've seen positive action over the summer in China. The European headlines have been more encouraging. So even in the midst of the uncertainty and the volatility of our headlines here, I think most of the world is taking it in stride, and you don't see catastrophe, and you don't see what are a few of those dramatic terms that everyone's polarizing on.
Right.
You see normal pullbacks that if we were up and you were chasing, people would be complaining about that. Mm-hmm. So with that being said, if you look at the EWJ, it did reverse yesterday. This was the tremendous run you saw since November, almost jaw-dropping. And then this pullback was pretty fast and furious, but then you had your bounce back and it was kind of wedging. It did look like we had some clear sailing when it broke above the downtrend. Okay, and then it basically pulled back. So people didn't want to chase it over there, so now you have your chance to potentially buy the dip. Overall, look at this, if you want to do it just like this, a low, a higher low, another higher low, I think that Japan is taking it in stride. If you look at China, okay, or the FXI, that also looks pretty constructive. Here's your double bottom from June and July, higher low, higher low, higher low. Then you had the trend line that was intact ever since the start of the year. Another momentum move above it that just couldn't be sustained with the environment we're in right now. So we came back, retested, and look, we're still even holding a little bit higher here, above most of these moving averages. So I think the backdrop in Asia is encouraging for what we're looking at here.
Well, turning to our markets then, of course, we did have a down day in our markets yesterday as the government shutdown continues, and this morning our futures are hugging the flat line. So is it safe to say that once Washington gets out of the way, that will help us get our strength back?
It could, but the question is when. Is it the next 2 days or 3 days with some kind of piecemeal? Does it go all the way to the debt ceiling? And so we're kind of at the mercy of this drib-drab day to day. So when this takes place, this is when you have to figure out what time frame do you trade. Are you a macro investor? Do you trade intermediate trends, or do you just actively trade? So what I like to do is just show you from a few different time frames a little perspective. And if you look at the overall market just from November, I'm talking just from this year, you look at the trend here according to this chart, you will see here's where the rally started after this pullback coming into last year at this time. Okay, and then this was the start of the year, the igniting move, and from there the trend got tested right here, the trend got tested right there, and it looks like the trend is getting tested once again. If you do trade actively, you had some signals. Here you had your outside day May 22nd, which gave you a tradable move to the downside, which you could have made some money short, especially right when we broke 1640 or when we broke the 50-day. And then you had this move higher, that also a breakout failure, your head and shoulders top. This was giving us some signals to get short here. Unfortunately, even for myself, I feel like I didn't make a dime short this because I didn't see it coming. We had this breakout failure, then all of a sudden the drip drab where every other day, you kind of had an opposite trend. You had a green day, or a reversal, a red day, a green day, a red day. So hard to trade this, no momentum. So anyway, if you look at some of your retracement rules, which we sometimes look to see, you want to measure commitment a few different ways. Okay, if you want to just measure the commitment from the recent low, which was put in in August, you have different levels here. Okay, right now we're just about at the 0.61 retracement level. Okay, and the 100-day. So really 1660 to 1667 is pretty big just for commitment for that. But let's put this in perspective. If you are trading for a bigger time frame, and just say you jumped on this rally from the start of the year, which was right here, okay, and you go all the way up to where we just peaked out, okay, all we really pulled back is 25%. Okay, look at that retracement, 25% of that recent move, and that shows a really strong trend that started all the way back from the the beginning of the year, right around there. So you're deemed strong if you pull back to the 0.382% retracement, which would be a retest of the lows of 1627. And some guys don't lose faith even if you're at 50%. So a lot of people measure these things all different ways. Depends if you trade for the day, you trade for the week, you trade hundreds of millions, or you trade hundreds of thousands. So you just got to know your own commitment, especially considering that we are getting close to this trend line. For me, to be honest, I think that even if we were to break below 1660, I think the high probability of testing 1628, but I think max downside comes right around here. Because, Brittany, there's some people out there right now that are saying that, we break 1660, we could be down 5-6% in a day, we could be down 15% correction, 20%. I'm not in the camp of 15-20% correction. Mm-hmm. I'm in the camp that, we might hold 1660, but I have a feeling they're going to play around with it because we have another week. That ultimately 1627, if we test it and it holds, good spot. And if there's an overshoot, 1580 to 1600. But that, to me, would cap the downside. So nobody like me wants to be caught in a 60 handle down move, because it could hurt you, especially from a P&L standpoint. But I don't think that, if you're a macro investor, that you need to change your overall whole thesis because of the headlines you're reading that are really polarized. And if you think about it, 2-3 weeks ago, what do we hear every other day? Syria. 2-3 weeks, every other day, Syria, Syria, Syria. For the last 2-3 days, you haven't heard it once.
Right.
So I'm sure in a month from now, we're probably not going to hear about the debt ceiling again. We're not going to hear about, what's going on in the circus in Washington. So just, at this point, it's all important. It's everyone's different. It's all about what you do, how you approach it. If you use all 3 time frames, then you got a lot going on in your head, and have some plans and wait for the market to confirm it.
All right. Well, coming up, we're going to go in the trenches with some high beta tech stocks. But first, a quick commercial break. We'll be right back.
I'm Mark Sperling, Director of Trading with T3 Trading Group and contributor to T3 Live. Do you trade on your own, but you wish you enjoyed the benefits of a large trading floor? With the T3 Live virtual trading floor, we deliver that experience to you on your computer. On the VTF, you can follow the long and short positions of experienced professional traders like myself, Scott Redler, and others, and listen to our live radio stations as we navigate the markets. In addition, you get the added value of a large community of sophisticated and like-minded traders. Your membership to the virtual trading floor also includes access to our 2 very popular newsletter products, Off the Charts and the Price Point Sheet at no additional cost. In my opinion, joining the room will be the best trading decision you will ever make. I would like to invite you to begin your membership with a 7-day free trial. To get started, visit t3live.com and click on the Virtual Trading Floor tab. Have a great day, and I look forward to seeing you in the VTF.
We're back and going in the trenches with some high beta tech stocks. We talked Amazon recently about how it was coming to a key point, and yesterday it did drop about 3% to test the 21-day, so it seems like it's at a pretty key level here that it needs to hold.
It's at one of those momentum levels, whereas we were trying to figure out what could lead us off the lows yesterday, and high beta really didn't do it. Amazon, if you look at the chart here, last week it looked really good. First of all, this is the overall macro chart. Remember that peak here, 285. Really nice breakout. This was earnings, and it kind of broke out and failed and led to this, this decline to retest and the descending channel. And then what you want to do as a trader, you look for setups. You look at look at it close up and close up. Good trade, good trade. Then it was hovering up here, and we were trying to figure out, can we get continuation? And then what happened here? A small engulfing red dog reversal where we traded above 321.73 and failed. Right there, that showed you no momentum here. Market a bit weak. Kind of get out of the way if you were trading it for momentum. If you've been a buyer since here, or you bought in the retest, you weren't that worried about it. But now, if you use high-level stops, this is a spot probably to have a high-level stop. Short term, look at yesterday's low of 309.74, use that as a pivot. But if it trades below it and doesn't reclaim it, this sharp accelerated trend line could come in jeopardy, and you could see a move back to perhaps test this recent breakout, especially if we see market pressure, which would come in right around 299.90.
Now, after a 3-day sell-off in Google, do you expect an oversold bounce here?
This stock, has my number. I wanted to paste Google in my head and stick and say, don't trade it. As an investor, it's fine. It's so close to all-time highs, and it's, on its way. But recently, every time it's looked good, you had to sell it. And, if you Google who trades Google bad, you'd see a picture of me. But anyway, you go to the chart, and last time we really liked Google, it was right around here. Remember, we came in, it looked as if this was going to be the next $1,000 stock, and it said not yet. Boom. Right there, it broke, and that was my stop, and it hurt that day. Like, 295? Then you had a little bit of follow-through. Boom, boom. Okay, then from here, we're like, okay, what's going to happen here? Maybe we get a reversal. There was your little reversal in Google. Gave you a quick little push, back up. Let's go back up. I like to show you, boom, boom, boom. And then right here, when it looked like it was going to break this, it went above it and failed. So, make a long story short, all in all, this stock's hard to trade on a micro level, and now it looks as if it's breaking this small little trend line that's here. So if it were to get below this pivot, so your pivot from yesterday is 864, you could easily see a retest of this channel, which is about 845, and by that point, this moving average will probably be right around there. So overall, still descending and still nothing to write home about. And just like it did it from here all the way down, be a bit careful if you're not a macro investor in Google.
And then there's LinkedIn, went as low as 237 yesterday. The stock did close on lows. So will this be on your radar for some potential downside follow through today?
It's probably opening flattish if it gets below yesterday's low. Right now it's been hard to, that's why it's such a frustrating tape, because it's hard to press shorts, because after a down day, it usually bounces a little bit, frustrates the shorts, and then goes down. Right. But anyway, with this stock, it also didn't have strength yesterday to pull the market off the lows. Here's your upper range. Market said, no momentum for these high beta names, traded lower. It's at this moving average. I would say watch 237 for a potential red dog reversal. If it trades below, comes back above, kind of like what happened right here. Okay, and then if it doesn't, here's gap support. And there's nothing in the way here besides this small point of reference. So if you're actively trading LinkedIn, be careful. It's sometimes thin and wide, and right now there's not anything really clear cut as far as a pattern, except for a potential downside.
Well, and if you remember in yesterday's morning call, we talked about the Jefferies upgrade in Apple, which lifted the stock. The stock did come back off its highs yesterday, but it did finish the day up about 1%. So what did you make of Apple's action?
The same theme continues. If you have a good price and you add to it intraday because it looks like it's going to break out, you probably wanted to jump from a chair to the floor or something, hopefully not higher. It's very unsafe. Don't do that as a trader. It'll be okay. But anyway, if you tried to buy Apple at $492 and change, you definitely were not happy at the end of the day when it closed around $487. But if you look at the chart still looks fine. Okay, this lower level channel has been building ever since the huge correction from the 700 highs. We've talked so many times about how when it broke its trend, you could have made a lot of adjustments. Even though it was Apple, you could have made an adjustment there. You could have made an adjustment there. P.S. Here's where it is right now. So the question is, is Apple going to give you higher prices this year? So at this point, this was your gap up after earnings. Here was when it reclaimed the 200 day when Carl Icahn's tweet, big little follow through, failed right there on event day, held support, and now it's just having a hard time breaking out above this area. So I would say short term, if it breaks below 45 and doesn't reclaim it, I'm sure some traders will say, I'm done with this thing again. But then if it comes back up, they'll probably buy it. That's what I usually do, kind of like what happened here. So ultimately, I think if you want to give this some space, give it to 478. Okay, 478, give it some space if it's a swing trade. And if it were to close below 474, then that would definitely be your stop. And if it holds in here, and builds another day, don't be scared. Next time it tries to break above this 492.5, to trade it for some type of move higher. It does look like it's under accumulation, and they have a lot of catalysts still in front of it, and it's still trading okay. I do think it sees higher prices this year. It's just how. Is it tradable? Is it frustrating? And is it during your time frame? For me, I'm going to be away for the next week. I'm going to be checking on positions. I'm going to try and hold Apple, and I'll be like an investor with stops out there.
Right.
So anyway, it's okay, but it needs to get back above 490 for traders to get all excited again.
All right, let's do some quick hits here. We're seeing some nice action in some small cap solar stocks, so maybe we can get some opportunities here. Let's take a look at Solar City, which just had a nice 2-day rally. What's the key levels to watch here? We
talked about this yesterday, and a sea of red. It actually went positive, pushed through the prior day's high. Still looks good. If you're a solar fan, have Elon Musk in your corner. This stock looks okay. A trade above yesterday's high of 38.58, it can go. And this is the real spot. If it trades above this and shows commitment, it's the first time in a while that you're getting follow through in a name like Solar City. But longer term, it looks okay.
How about Jinko Solar? This is acting pretty well. It's reached the target area from the newsletter about 2 weeks ago. that was a buy price that was listed in there. So what do you think about it now?
It's trying to hold up, and if you're looking for momentum in solar names, this one is a candidate. It's above the 8-day, but just be a little careful. You know, it's consolidating, so you know, look how long this phase took to consolidate before it went again. So here's your point of reference: traded versus 2266. The longer it holds above 2266, the higher the probability this group continues. This will be the first one making new move highs.
Oh, all right. And JA Solar hanging above the 8 and 21 day, showing some relative strength here. What do you think about this one?
This is if you're trading these as a group. I feel like you only need to trade the solars as a group because they're their own animal. You know, when the sun shines on them, just kidding. You know, they can get a little tan. And tan happens to be, let me go to that one, the ETF for the solars, which just to show you has been acting very well. Look at this group, nice little breakout here above the 8-day moving average. So as long as this ETF stays above this group could stay in vogue. So back to JASO. And you know, this is in the game, acting well. You know, holding above the 8-day, more work above 1021, and I think this can continue. For momentum, though, it's going to have to get above 1130.
All right, well, while not a solar name, we're also seeing some nice action in Starbucks. It's holding above the 21-day, showing relative strength there, and it's been building a tight upper level range. So do you expect a potential breakout?
Well, if you start to see some of these high-quality names actually break out, maybe there'll be some clues that the market's going to hold in there. But if something like this actually fails, then it's like they're just getting to everything. And if you look at Starbucks, this trend has been strong. It's been intact, and it's been underway. A lot of things that I just said, a lot of adjectives. Anyway, if you look here, it's tight. So it's actually pretty easy to gauge, because if you do get the high-volume move above 77.50, you know, it's been here for so long, it might have some girth to it. So this is actually an A+ setup. All right. If the market falls apart and it trades below 76.41 or maybe below this, you know, then it's off the table for that. And then it could retest a trend line like it's done and held for the majority of 2013. So put this in your radar. You know, if you see futures hang in there and a stock like this starting to break out, maybe, you know, you would know we're getting a positive day. But this is tight, and we love when tight patterns take place because something like this could happen.
All right, well, this is the last we'll see of Scott for just about a week or so. So what's your last bit of advice you have for traders heading into the rest of the trading week?
Just don't be polarized by the headlines. Obviously, you know, traders and market participants want to put excuses on the market action, and we do have overhang. You have this debt ceiling that's going to come in. You know, people don't actually know if it's going to think there's going to be a deal before, and then they're going to be this big gap up, or no deal, and then, you know, do they piecemeal, you know, some payments? But I ultimately think that they're not going to let, you know, the government default. You know, maybe for a day if they do that, or a day and a half. But they're not going to let it go on for weeks, where all of a sudden everything that, you know, we've worked on here gets diminished because of the circus on Wall Street. There's a circus on Wall Street too in Washington. But anyway, you know your time frame. Know that 1660 is important. If we were to break and close, you know, we could break below 1660. You know, do a washout, come back above it, and that's a red dog reversal. So if I'm not here to guide you through that, no, that means they just probably stopped out a lot of longs that were using 1660. Some people probably got short saying, oh, we're below 1660, we have to test 1627. But if we were to claim it, there's your red dog reversal. If we were to break below it and close on our dead lows after getting stopped out and there was no interest, then I think the next point of reference is 1627. Then from there, if we do bounce off that, we can be, oh, look, we have a double bottom. And then, you know, from there, then measure the strength in the financials, the home builders, see how the leaders are acting, see what's going on with high beta. You guys know the drill. We've been teaching, you know, the community long enough that you could be in the virtual trade floor in the chat and listen to off the charts. It's not all about me, even though I like to think it is. But it's not. You know, there's enough out there that they could, you know, maneuver it. But
right.
You know, for me, I'm going to be a little bit more broad-stroked, you know, and not as active. But if things show their face, I'll try and, you know, trade remotely from abroad and figure out if you know, things are worthy of holding in there, or just wait, you know, because the next week could be a lot of what we just saw the last week, which has been frustrating, no follow through, and lethargic and random, which is not adjectives that traders like to have in their vocabulary, you know, to make money.
Right. All right. Well, we'll miss him, but good luck to everybody out there today and heading into the rest of the week. Happy trading. Have a great day.